Hi, this is Tim Bryan from Bryan's Business Umbrella, a national virtual business advisory firm providing our clients strategic solutions to their unique problems via back-office platforms such as accounting, controllership, payroll, tax planning, bookkeeping, as well as advanced options such as strategic pricing, just to name one. We operate remotely and paperlessly in the cloud, but we're physically located in Buffalo, New York. And as I speak, my book should be coming out within the week, Designing a Better Business, an Entrepreneurial Guide to Navigate from Startup to Sustained Growth. So I'm very excited about that. It has a lot of good tips. I collaborated with 15 small business owners in the area who gave their advice on what worked for them, what didn't work. And I found it very helpful myself. I added some insight as to how I work things and how I help my clients out. And again, I said that in the last sentence, as I speak, and as I'm speaking, it is September 14th. So that will be coming out in the last week of summer, if it's everything's still on schedule. In the book, I briefly touch on the fact that I believe in and follow a profit-first methodology. And by that, I mean just what it says. I take profit first, and that in essence flip-flops the traditional accounting equation, which normally reads revenue minus expenses equals profit. And I switch that around to revenue, that's always first, minus profit equals expenses. And it's an advanced concept that I offer my clients as an add-on, as a premium menu item. Not everyone is geared for it mentally or wants to do it. It does take some discipline in the beginning. It's a different mindset, but it does work and it makes sense when you think about it. I learned it because I want to give credit where credit's due. I learned it through a book of the same name, Profit First, by Mike Michalowicz. I probably butchered his name, but it's Michalowicz. He and his business partner also certify accountants to become Profit First professionals. I am not certified in their program yet. We have had discussions, but I'm not certified yet. But I certainly do believe in the concept and methodology, and I do practice it in my own accounting firm. And the concept is simple. When you receive revenue in, you're taking a percentage, and I started out small to get accustomed to the new way of doing things, to practice it, and to gain confidence. So you take a percentage of that revenue and you put it into an entirely different bank account that has limited access to it to reduce temptation to take it, so that you are guaranteed your profit. So let's say if we're starting out small at 2% and you have a $100 receipt and $2 automatically goes to profit, so that your job has made a profit, and then that leaves you $98 to pay your expenses and your bills. So as a smaller percentage like that, it's definitely doable. You can see how it works. You can envision the concept and you actually see it in action. And eventually, of course, we want to make that bigger because we want obviously a bigger profit margin than just 2%. So as you grow the profit margin to a bigger percentage and take out the profit, then you have less of that revenue to pay your expenses. So first things first, we get our revenue, and then we take out a percentage of it, the majority of it going to a profit account, again in a different bank account than your normal operating account. And then you have to pay the tax man So a percentage of that goes to a tax liability account. I chose to open accounts online at Capital One, where I can only make a limited amount of transactions a month. So it reduces my ability to make transactions prematurely if I do get tempted. So far, so good. I'm happy to report. But so why do I like this methodology, and why am I a proponent? First of all, we are paying ourselves and guaranteeing that the work we do makes us profitable. So again, we pay ourselves, we take profits first, rather than seeing receipts immediately eaten and squandered paying bills. Because most businesses are they just eat through cash like crazy. Obviously, when money comes in, someone's always knocking at the door or has a handout to pay them. So we want to make sure that we get paid first. And then second, and then this might be, to me, it's even more important, by taking profit out of the equation, you're lowering the amount of money left to pay your expenses. And by default, you are forcing your business or firm to become more efficient and more innovative to ensure all bills do get paid. And by no means, by the way, am I suggesting that we're not paying bills. We are just finding ways to become more efficient and pay our bills with less money. So we're reducing the time we need to do jobs, we're innovating, and we're improving processes. And the innovation that we're going to use, or we'll find, is going to come about through finding better ways of doing things, which happens following Parkinson's law, which states work contracts to fit the time we give it. So in other words, what that means, if you have 10 hours to finish a job, it will take 10 hours to do the job. But if before your day starts, let's say you get offered Sabres tickets, so you have to leave work 3 hours early, so now you have 7 hours, guess what? You're going to find a way to reduce the time to get the work done in 7 hours. So you're innovating and you're increasing your efficiency. And if you are following this protocol of profit first, you will document what you did in order to get the work done more efficiently, and you'll make that part of your policies, procedures, and make it a system within your business so that you are constantly improving. Now, conversely, following Asimov's corollary to Parkinson's law, in 10 hours a day, you have time to fall twice as far behind your commitments as in 5 hours a day. So, in other words, the longer you work, the more time you have to, how should we put it, dilly-dally or fall behind. Something comes up, you always get that call that, or if you're working in an office setting with other employees, you might do more talking than working at certain parts of the day. So if you work shorter, so you're going to get the same amount of work done in 5 hours as you do in 10 hours. You work longer, you have more trappings and more ways to fall behind. So by taking profit first, we make sure that we're paid appropriately, and it further stimulates creativity, innovation, and efficiency, and eventually growth for your business. So I am wholeheartedly a proponent of taking profit first and flipping the accounting equation to revenue minus profit equals expenses. And if you would like to learn more about this or other podcast episodes and topics that I've spoken about thus far, including sunk costs, opportunity costs, mindset, any kind of accounting issues or whatnot that you have come up, feel free to give me a call or to schedule a strategy call and become a client. My number is 716-727-8844, or you can schedule right online on my website on the calendar, and it's Brian's Business Umbrella, and Brian is Briens, businessumbrella.com, and I look forward to hearing your feedback on this topic. Some people feel it's controversial. I think it makes a whole bunch of sense and is actually quite logical, but there is general accepted accounting principles, which it has to be a principle that can be followed throughout the world. And so that says revenue minus expenses equals profit. This, you're still paying your expenses, you're flipping the equation, making sure that you get paid first. And to me, it's a much more logical way to run your business. And again, it stimulates creativity and efficiencies. So in the long run, you're way better off flipping the equation and making it more conducive for yourself. And with that, I will end this episode. Have a great day and lead with love.